Oh, Uber. This bad boy was up 11% in the normal trading session, and guess what? It carried the momentum from yesterday after Lyft's earnings, and reported earnings today and after hours is up 6% in addition. Son of a gun. What is going on with this stock to go up 17%? Well, let's take a look at these earnings and see what's going on. Oh, sorry, that just made me want to vomit. Uber Q1 GAAP EPS of negative $1.70 per share. What is going on? Negative $1.70 EPS missed by 80 cents? Son of a freaking gun. This is a company that says they're going to be freaking profitable in 2 years? Holy crap. Oh, sorry, I don't mean to be distracted. Revenue, though, $3.54 billion, up 14% year over year, beat by $170 million on that aspect. So from a revenue perspective, you can say there's good things going on for this company. And I think a lot of investors aren't thinking about it. For many, I really just don't think they're thinking about it. Gross bookings, though, $15.8 billion, but rides down 5% year over year to $10.87 billion. Another thing, I don't think investors realize that ride sharing is going to be even worse next quarter for them when they report their next quarter. I expect an even worse number in that rides category by a good margin. It's going to be a decent chunk. I'm just going to tell you that right now. But that's just a horrific EPS number, and I'd like to take a look and see what's causing that. But with the revenue beat and earnings miss, started showing the strain of the pandemic, which trimmed $19 million off of GAAP revenue and weighed on the ride segment. Shoot, that's just crazy. Uber Eats was up 54% though during the quarter, which might be something you might want to consider. Uber Eats is a part of their platform that is big, but it is also extremely unprofitable. Uber Eats is such an unprofitable thing, and that probably hit their profit line pretty hard. But it's a very massive thing if you think about the fact that more people are going to be getting stuff delivered to them. Uber Eats is going to benefit quite a bit, so there is positive in terms of that. So definitely keep that in mind. Monthly active platform customers totaled 103 million, which is up 11% year over year. Net loss was, oh my freaking gosh, $2.94 billion compared to $1 billion in last year's quarter. I can't even fathom how a company like this can exist. I don't know. Maybe that's just me, but a company that has on multiple occasions lost $3 billion in a 3-month period, yet they're still just fine. It is crazy. It just makes you wonder, how are people investing in this company? $3 billion lost in a quarter? Gosh, if I had $3 billion in my name, I'd be the happiest man alive. And they just throw it away like it's freaking just chump change. Are you kidding me? They lost as much money as their freaking revenue here was. Holy crap. Gosh, that's crazy. Adjusted EBITDA loss of $612 million, up 30% year over year. More loss. Oh, they ended the quarter with $9 billion in cash. Not going to last long with these numbers. Ooh, next quarter's going to be worse, guys. Just going to tell you that. So during the earnings call, this is a newer article. Uber management says rides have experienced week-over-week growth in the past 3 weeks. Last week saw an increase of 12%. That doesn't help me that much because how much were rides down? Again, rides were down 80% in April. Okay, the fact that you're seeing growth in May doesn't matter that much to me. 12% when you're down 80%, 12% isn't that much, okay? I'm just going to tell you that right now. It's going to be a horrific quarter coming up for this company. It's going to be horrible. I'll show you that right now. Profitability remains Uber's top priority. An example believe the pandemic-related delay is a matter of months and not years. Are you kidding me? They guided for profitability in quarter 4 of this year, and they just lost $3 billion. This is the most delusional, just a delusional management company. Our management of this company, I can't believe that they have the audacity to say, yeah, that's only going to be a matter of months that we fix this. Are you kidding me? Holy crap! It's wild. It's wild. And the sheep just keep falling for it. I know this might get a little hate, but this is just disgusting. I don't know how anyone can defend a company losing $3 billion and then saying it's no worry. It's identified $1 billion in annual fixed cost savings. Well, where are they? Oh, sorry, don't mean to get heated, but let's look at this earnings report, okay? Let's look at what they have to show me and see if they can change my mind. Growth, obviously, net bookings, 8% year-over-year growth, 10% on a constant currency basis, while rides declined 3%, but eats grew 54%. So, interesting. Revenue growth of 14% year-over-year. Adjusted net revenue year-over-year of 18%. So, again, that's nice growth. I will give them that. I just got to give them that. Profitability, I don't believe their adjusted EBITDA numbers. I mean, it's just, again, they can inflate those however they want. We care about the fact they lost $3 billion for sure. But they're saying that rides delivered $581 million in profit. And again, rides are the profitable part of this company. But if they keep on to Uber Eats, which accounted for a $313 million loss, and that's just their adjusted EBITDA, which again is not quite accurate, but net loss of $2.9 billion, which includes $277 million in stock-based compensation. That's not even anything. 277 million does not mean anything to that 2.9 billion number. So I don't even know why they need to mention that. That's just a huge waste. A pre-tax impaired write-downs of $2.1 billion. What? Why? Net loss attributable. Oh my gosh. So net of the tax benefit would have been $1.1 billion in loss. And they just flaunt it like it's a good thing. It is crazy. So monthly active people in millions, you saw an 11% growth, and trips growth of 7% year over year too, which is good. Monthly active trips per monthly active customer is 5.4 right now, which is down just a little bit year over year, nothing massive there. Gross bookings, again, we saw good growth in that. Adjusted net revenue, it's good growth. I don't know. I hate to be this guy, but to see growth of 18%, but such a massive profit miss, I just hate to see it. Because if you're going to expect a company to lose that much money, I'm going to want to see growth that is just absolutely absurd. I want to see upwards past 50% growth, okay? Not 18%. I mean, it might just be me. I don't know. Maybe it's just me. I could be insane. But that's my opinion on the matter. But here's these worthless adjusted EBITDA slide. Don't really trust what they're saying because they're fudging the numbers, kind of, what can I say? They are fudging those numbers. So I'd like to look at that balance sheet, and we will look at the balance sheet, but the rides, products connect consumers with drivers who provide rides in a variety of vehicles such as cars, auto rickshaws. That's right, baby. They drive those auto rickshaws, motorbikes, minibuses, and taxis. Rides also include activities related to the Uber for business. I almost said Uber, but again, that's just defining what each segment is. We don't care too much about that. But rides, again, this adjusted EBITDA, not that important, but annual growth here. Net revenue for rides of 6%. Not a lot going on there. In my perspective, I definitely would like to see a little bit better. Adjusted net revenue for Eats, though, up 124%, as you can see, as a percentage of constant currency growth year over year. Definitely big growth here for Uber Eats. That's a big, exciting part of it. But you also see the net loss is just, it hurts. I mean, this is a not profitable portion, and it won't be a profitable part of the business. It's not going to be. It's crazy. So, from an assets perspective, they're going to throw out that they've got, right now, $11 billion in total current assets, total assets of $30 billion, right? That's versus $31.7 billion in 3 months ago. So all things considered, their balance sheet hasn't been hit, horrific, right? Liabilities on this company of total current liabilities of $6.6 billion and total liabilities in general of $17.7 billion. Again, that is versus a total assets of $30 billion. So overall, shareholder equity of $12 billion is not the end of the world. The balance sheet is not beautiful, but it's also not good looking. Does that help? It's hard to account for a $30 billion loss. The amount of share valuations, I mean, this is a company that raised a lot of capital off of devaluing shares. I mean, they sold shares to raise capital. That's how they afford these losses. I just don't see where the shares can go from here. I mean, it's completely just off fictitious value. And the ride-sharing business will be massive in the future. There's no doubt about it. It's just Uber's not going to be always number one player. And if they're losing money like that, I mean, that's horrific. I mean, do I need to highlight any more of it? It's just, it's ugly. It's an ugly number, and I think you might understand I'm not touching this company. I'm not getting near this company. I just really dislike that. That is horrific. It's comical that a company can lose $2.94 billion, $3 billion in 3 months. I mean, how does this company exist? That's crazy. I'm not touching this company. I can't believe it. Whew.